Okay, let's dive into the latest report from First Solar, one of America's biggest solar manufacturers. And honestly, their numbers tell a really strange story. You see, they're selling more solar panels than ever, but their profits are getting squeezed. So what is actually going on? Let's break it down.
Right off the bat, we've got a paradox. On one hand, First Solar absolutely crushed revenue expectations, bringing in almost $93 million more than anyone predicted. I mean, that's a huge win. But on the other side, their earnings per share, which is a really key measure of profit, well, it missed the target. So how are they selling more but making less than expected? That's the puzzle we need to solve.
So to understand that fourth quarter puzzle, we've got to zoom out for a second. Because while the year ended on a pretty complicated note, 2025 as a whole was a massive record-breaking year for the company.
Let's start with the top line. A staggering $5.2 billion in net sales for the year. And to put that into perspective, that's a 24% jump from the year before. That isn't just growth, that's a huge leap, and it signals some seriously surging demand.
And how exactly did they hit that huge sales number? Well, by selling a record 17.5 gigawatts of solar modules. It's a crystal clear sign that their products are basically flying off the shelves to meet this massive demand for new solar projects.
All that record-breaking activity led to an incredibly strong balance sheet. Get this, they ended the year with $2.4 billion in net cash. You can think of that as a war chest, right? It gives them immense flexibility to invest, to fund R&D, and to weather any kind of market turbulence.
And this brings us right back to where we started. The fourth quarter numbers are all here. Revenue of $1.68 billion, a clear beat. But right below it, you see the EPS, their profit per share, falling short. So even after a record year, something squeezed their profits right at the finish line. To find out what, we have to look at their core strategy.
And that leads us to their biggest competitive advantage. And you know what? It's not just about their technology, it's about their geography. First Solar has anchored its entire strategy on American manufacturing, and U.S. policy is the wind in its sails.
Now, the centerpiece of this strategy is something called the Section 45X tax credit. In simple terms, the U.S. government is literally paying companies like First Solar to build their products here at home. And we're not talking about a small amount. They expect to get over $2.1 billion from these credits in 2026 alone. That is a massive financial tailwind.
But beyond just the tax credits, U.S. policy has created a kind of protective moat around First Solar. You've got tariffs that make foreign-made panels more expensive, there are new rules restricting competitors with ties to certain foreign countries, and on top of all that, First Solar is aggressively defending its patents in court. All these things work together to make their American-made product way more attractive to U.S. developers.
The CEO, Mark Widmar, he sums it up perfectly. In a world full of global uncertainty, what First Solar is really selling is contract certainty. Customers know they'll get their panels on time and at a set price. In this kind of environment, reliability has become their killer feature.
But look, U.S. policy only gives them an edge for now. To win in the long run, you have to have the best tech. And that's exactly why First Solar is in this high-stakes race to develop the next generation of solar power.
So this is the current battlefield. On one side, you have First Solar's new CuRe platform. On the other, the dominant competitor tech, which is known as TOPCon. So what's the crucial difference? Well, First Solar claims their tech can produce up to 8% more energy over its lifetime. And believe me, when you're building a solar farm the size of a city, that 8% difference is worth a fortune.
But CuRe is just the next step. Their long-term moonshot is a technology called perovskite. It's a really high-risk, high-reward bet that could potentially make solar panels dramatically more efficient and cheaper. And as you can see from this timeline, they're making steady progress, with a pilot manufacturing line expected to be ready in early 2027. This is their big play for future dominance.
So they have a strong U.S. strategy and a really promising tech pipeline. But now, let's get back to that profit mess and connect all the dots. The company's own forecast for 2026, while it looks solid, comes with some significant warning labels about rising costs.
First, the good news. Their official guidance for 2026 is very strong. They expect net sales to stay right around that $5 billion mark, and they're projecting a very healthy adjusted EBITDA, that's a core measure of operating profit, of up to $2.8 billion. So the business itself is fundamentally resilient.
But here's the catch, and this is the answer to our puzzle. Building all those new American factories isn't cheap. They're spending hundreds of millions of dollars on warehousing, factory ramp-ups, tariffs, and setup costs. These are the expensive growing pains of their Made in America strategy, and they are hitting the bottom line directly.
So, to bring it all together, First Solar's strategy is basically a two-pronged attack. They are leveraging the U.S. policy to become the reliable domestic choice in a turbulent market, and at the exact same time, they're racing to develop the next-gen tech to secure their lead for decades to come.
Which leaves us with the final critical question. The Made in America strategy is a powerful shield, no doubt, but as we've seen, it comes with massive costs. So the ultimate test is whether this American anchor is strong enough to weather those costs and secure a top spot in the global solar race. It's a very high-stakes bet, and you can be sure the world will be watching.